Hello and welcome to a very special episode of the EMG Podcast. I'm your host, Spencer Gore, CEO of EMG Health, and today we're celebrating 100 episodes of this podcast. Now, I've had the chance to interview some truly inspiring people from the world of business, entertainment, sport, and many other things since we launched the podcast back in 2018. And today is no different. I'm very pleased to introduce legendary businessman, Sir Martin Sorrell, who I had the chance to interview recently. So Martin was CEO of WPP for 33 years, building it from a £1 million shell company in 1985 into the world's largest advertising and marketing services company. When Sir Martin left in April 2018, WPP had a market capitalisation of over 16 billion, revenues of over 15 billion, and profits of approximately 2 billion, with over 200,000 people working across 113 countries. 2 years ago, he founded S4 Capital PLC to build purely a digital advertising and marketing services business. In a little over 2 years, S4 Capital has over 2,600 people in 30 countries, with a market capitalization of over $2 billion. We chatted for about 45 minutes, and there's some great takeaways from it, including Sir Martin telling me how a bag of fish and chips helped build a £22 billion business. We talked about the importance of having a roadmap to help you achieve your goals, and that if you aim to be the best, you will probably become the biggest. We also discussed the be obsessed or be average concept, and that leaders make a difference, especially when they have skin in the game. Finally, we then touched on the need to make decisions, not delay them, but to make them and make sure you make more right than wrong ones. And at the end of the day, it's all about maximizing long-term profitability. So I hope you enjoy it, and please now join me for a fascinating 45 minutes with Sir Martin Sorrell. Hello and welcome to the show, Sir Martin. Thank you very much for joining us today.
Good to be with you.
So I wanted to kick us off and start off by going back to 1984.
Yep.
You're the Group Finance Director working for the world famous Saatchi & Saatchi, overseeing all of their acquisitions. And then one day you think, I've had enough of this, I'm going to start my own business. What makes you make a decision like that? What pushes you to make a decision like that? It's a pretty brave thing to do.
Well, it wasn't exactly brave because I've been working at Saatchi's for about 9 years. I enjoyed it enormously. They gave me all the freedom to do whatever I wanted to do. Interestingly, as I didn't get any public credit for it, but it was okay as long as it was within the firm.
Yeah.
But frankly, it was a roadmap that my father, my dad, had suggested when I started. His advice, for what it's worth, was find an industry that you enjoy, find a company within that industry that you enjoy, build a reputation, as he put it, within that company. So that's not a reputation in terms of being known externally, but being known by investors or shareholders or clients or people inside the business or analysts as being somebody who knows what they're doing. And then if at the age of 40 or thereabouts you want to go off and do something on your own, do it on your own. So I was following, it wasn't that brave really, I was just following a roadmap.
Yeah.
That had been, if anything, I would probably regret that I didn't do it earlier. Maybe I should have done it about 4 or 5 years earlier when I was 35 as opposed to being 40. But, it was 1985, I was 40 years old. That was what I regard as being the last chance saloon because, at 40 in those days, it's not so much now, but in those days when you were 40, you look back at the first 20 years of your supposed working life and forward at the next 20 years, and you thought, well, this was the midpoint. And now probably things have shifted a bit. I'm 75 and I'm still working, so I suppose that is probably 50 now, where you look back at the first 30 years and you look at the next 30 and say, what are you going to do? So it wasn't that brave. I borrowed some money. I had, I think, about £2 million worth of stock in Saatchi's, and I borrowed about 250 million from the bank to buy stock in what was then called Wire and Plastic Products, along with a friend called Preston Rabel, who left fairly early on before we made the bid for JWT. I don't think he had a strong stomach for what he thought we were going in over our heads. But in any event, I mean, it was what it was, and I was really following a roadmap my dad had laid out.
Yeah, that's pretty cool, having that roadmap laid out like that. I think a lot of people these days struggle for what they want to do, and having someone help you like that, I think is a really good thing.
It's always important to have somebody you can talk to who has no subjective. Well, they might have an emotional attachment like your father or whatever, but there has, they're concerned about your agenda, your personal agenda, and they don't have any motives of their own. I mean, I've had two mentors. One was my dad, but he died in 1989. And then I had a lawyer in New York called Phil Reese, who was a sort of, I guess, a surrogate dad, actually, in his way. He didn't have a son. He had a couple of daughters. Was a great father to them. But I don't think he had a son. I don't know in any way I was a sort of surrogate son. I don't think so. Or maybe we were brothers. I don't know. But because I didn't have a brother. I had a brother who died at birth a year before I was born. But Phil, until he died just at the beginning of the new millennium, sadly, of cancer, just like my dad did earlier on, I mean, he provided that advice. And I think it is important to have somebody that you can talk to who is objective and has your interests at heart and can be an advisor. And I think it's always useful to have that. Yeah,
very much so. You touched on WPP there. So you left there and invested in wire and plastic products. They were a wire shopping basket manufacturer. Yes. You went on to become the CEO. You took that sort of figurative basket and went on a shopping spree, buying up advertising companies. So was this part of the roadmap that you'd worked on as well, or was it an idea that you sort of built on?
I don't know, it was part of the roadmap or not. I mean, it was to build a business, and we started with a shell company, and it was you could call it almost a shell game, if you like. And in a way, we've done that with Derriston and S4 Capital, which we injected into a quoted shell called Derriston in September 2018, and renamed the company S4 Capital. I mean, the shell game, if I can put it like that, is rather like the SPAC game, which is the special purpose acquisition vehicles that are now coming almost to a penny in New York at the moment. We're in a bull market, and bull markets favor these type of operations. I did look at a SPAC for S4, but it takes too long, and the investors have the right to call the capital, pull it if they don't like the investments that you're making. So I've got a different structure. It was quicker and easier with the and S4 Capital is like a private equity vehicle. We have a carry depending on how we do. I have a controlling share, so it's quite sort of unique, or certainly it's different to many other vehicles. But the shell game, I wouldn't say it was part of the roadmap, but in fact, funnily enough, in about 1971, 72, I did try to do something with my father. I mean, my father, who I love dearly, is, and forever will be my best friend. He and I tried to work together, and I have two regrets in life. One is that I never worked with him. We tried, as I said, in 71, 72, we tried to do a little shell vehicle, but it didn't work out. And he and I couldn't get on together, working together. I mean, remarkable when, I think that I used to speak to him, I'm not exaggerating, 8, 9, 10, 11, 12 times a day, even in the height of hostile takeovers, so-called, for JWT or Ogilvy in 1987, 89. Obviously, we didn't see anything beyond that. But the two regrets I have, one is that I didn't do anything with him, and second, that he didn't have his own company. He was always a donkey in the traces, as he put it, pulling the cart for somebody else, and because he wanted his family, my mother and myself, to have a good life, good education, be well looked after. We weren't a rich family, but we were comfortable, particularly as my father progressed as the managing director of the largest radio and TV electrical retailer in the UK with about 750 stores dotted around the country. So those were my two regrets. But the structure of wire and plastic products, or WPP, and indeed S4, is a well-trodden path. It's nothing that's unique to me. It's something that people do. I mean, we've just managed to execute. Sarches itself was a sort of shell game, if you like, because it was injected into Garland Compton, the company in which James Gulliver had an interest in, and I worked for James, and that's how I got to meet the brothers. And they hired me as the CFO, and I worked there for 9 years. So I wouldn't say it was part of my dad's advice. My dad actually, interestingly, said to me, when I did the wire and plastics deal, that when he was a young man, I think he ran a company, one of the companies he ran, Civic, Broadmead, and J&M Stone. And J&M Stone, I think, was a quoted company on the London Stock Exchange. And he said to me, actually, as he saw me doing what I was doing, that, when he was a young man, he didn't realize, what you could do with shell companies. I think in those days, after the war, after the Second World War, there weren't many people doing that type of thing. I mean, there might have been some operators who were doing it, but probably a little bit murky. But he said he didn't really realize, the way he put it was a bit unfair, was because he left school when he was 13. He wasn't educated enough to figure that out. So no, it wasn't preordained. But when you start with nothing, effectively, wire and plastic products was, as you say, a shopping basket manufacturer. Made pots and pans and saucepans and things, very good ones actually, and very good shopping baskets. But it was small, run by Gordon Sampson, lovely man, who was, where there's muck, there's brass. He didn't believe in paying a premium for anything. He bought companies from the liquidator. He was very shrewd. And we went and saw Gordon, Preston, and I in Dartford at the Wireworks, smelling of fish and chips because we were starving. Gordon fixed the interview at about 2 p.m. in the afternoon, deliberately. I mean, not offering us lunch or anything. So we traipsed down to Dartford. We were in Dartford High Street, and there was a fish and chip shop. And I said to Preston, I'm starving. So we went in and had a bag of chips, I think it was. And to his dying day, Gordon thought that we had gone to the chip shop to prove that we were men of the people, because Preston was a bit of a toff. He was a city stockbroker. I was the finance director of Sarches at the time, which coincidentally, amazingly, the advisor to one of the advisors, County Bank and Pound Mill Gordon, were the advisors to wire and plastic products. And they were people that I knew very well. Right. And just as an aside, an amusing story is that Gordon, when I went to see Gordon, with Preston, he rang a director at County Bank, which was a subsidiary of NatWest at the time. And County Bank were advisors to WPP2. And Gordon said, look, I've just had this bloke Sorrell in with Rabel, and, they tell me they want to do this with, build wire and plastic products into an advertising and marketing services firm, a multinational advertising and marketing services brand. What do you think? To this director of County Bank. And the director of County Bank was obviously put in a very difficult position because he had a classic conflict of interest. So he said to Gordon, no, let me think about it overnight. And he called him back the following morning and he said, wait, I can't give you any advice, Gordon, but let me just tell you a story. There was a guy called Greg Hutchins who had a company, I can't remember what it was called, a shell company, and or come across a shell company. And Greg Hutchins bought into the shell company. The announcement was made, and before the announcement, the share price was 30p, and after the announcement, it was 60p. He said, "That's all I'm going to tell you," and that was it. So that was very funny. And actually, the interesting point about that story is, how important luck is. I mean, it was just lucky that I was known to County Bank, I was known to Pamela Gordon, and they gave me a positive recommendation. To go back to my dad's advice, build a reputation. So if you build a reputation that you know what you're doing, or halfway know what you're doing, it always rebounds to your advantage. So that was it.
So maybe not luck. You've deliberately gone out and networked and met those people and got in that environment.
yeah, again, my dad said you make your own luck, and I think there
Yeah,
is
yeah,
some. If you work hard at things and you meet enough people,
yeah,
the whatever it is, the 9 degrees of separation or whatever it is,
yeah,
work to your favor. I mean, the coincidences that occur, the actual
yeah,
sort of, if I can put it crudely, movers and shakers that that constitute, let's say the Western or even the Eastern world, it's a fairly limited number of
yeah,
people and contact points, probably about maybe 1,000 people or something like that, and you see them certainly pre-COVID popping up at
yeah,
conferences. You could spend your life going to conferences talking to them, extremely boring, but you could do that. And actually, that web of influence, or that network is quite limited
yeah.
and quite intertwined. So that was a good example of it working to my advantage.
Yeah, I think it was the Gary Player quote. The harder I work, the luckier I get. It's
Yeah,
that,
and I think Gary Player was a client of Mark McCormack's when I worked for IMG. The
right.
big three: Arnold Palmer, Jack Nicklaus, and Gary Player. Those were the three. So I knew Gary quite well. Very, very determined. Practiced all the time.
Yeah.
Never off the driving range or the putting green or the course. Extraordinary, and very fit too. Very fit.
So while you were at WPP, it was a 30-year period. You spent billions of pounds buying some of the biggest advertising companies that there were, some of the biggest names in advertising. You took the company to be the biggest advertising company in the world. Was that always a goal for you, or was that just as a sort of a result of the success you had over the years?
No, I think I wanted to build. I've always been consumed with scale. Maybe it's because I spent 2 years at Harvard Business School, and every day we had 3 case studies, and the question was, what should the chairman and or CEO do, and why? And the trouble with HBS, and I was part of what was called the most naive class at the Harvard Business School by the admissions dean, Dean Athos. This was the time of the Vietnamese draft, so a lot of Americans, to avoid the draft, went straight on to graduate school. So we were naturally younger. So the average entry age was probably around about 23 or 24, exit age 25, 26. Today, entry about 25, 26, exit 27, 28. So it was a much less experienced class. But the trouble with the HBS course is you come out of it, think, you've done 3 case studies each day about what should the chairman and CEO do, and you come out and you think you can run the world. And the truth, you can't run the world for at least another 20 or 30 years until you've had the experience. So, I always wanted to do things at scale. At S4, we started with a clean sheet of paper. And if I have any frustration about the last 2 years, it's, we're at a smaller scale. Interestingly, we're already 25% of WPP's market cap after 2 years, with just 2.5% of their people. So they've got 100,000 people, we've got 2,600 people. Our market cap is now about 1.8 billion pounds, and their market cap is about 7.5 billion pounds. So we're 25% of their market cap with about 2.5% of their people. But if I have a frustration, it's that we don't have the scale. Now we can do that by being more and more successful, both organically and through deals. But to be number one is always, it's like scoring a century, isn't it? I mean, it's a measure. When Zach Crawley, gets the whatever it was, the 10th highest score I think ever, or maybe even better than that, 6th or 7th highest score ever, 270 whatever it was, at a tender age, that's a marker. And people confuse. They, often people will say, all he's interested in is making money. That's not true. That's runs on the board. That's the score.
Yeah.
And in the same way, being number one is a measure, sometimes not a good measure, but it's a measure of how successful you've been. So I would say these are signposts or markers of achievement. And, we hit a market cap, I think at the peak, 22 billion pounds. When I left, it was 16 billion, and now it's about 7.5, 8. So we'll see. But I just think being number one is an objective. I don't think it's, Morris Saatchi used to say, and I think he was dead right, if you're the best, you will become the biggest. And it's not that you want to be the biggest, you want to be the best at what you do. But if you are the best at what you do, it's like if S4 is the best digital transformation agency, consultancy, which I think it is, we will inevitably become very large. We might not become bigger than Accenture. Accenture is 150 billion. We're a paltry $2.5 billion or just close to it. But we're just starting, so they've been at it for a long time. But that's a marker. So you set yourself. It's very good to have an enemy.
Yeah.
It's very good to have a driving force. And I have a couple here. One is, I have, as I've said publicly recently, a point to prove in relation to WPP, because I think the board of WPP, and particularly the chairman, behaved abominably. And I think they deserve to be taught a lesson, but we shall see.
Yeah, no, good on you, good on you. Yeah, that leads nicely on to my next point. You talk almost about an obsession there of becoming the best, which I buy into completely. And I did a podcast with an American gentleman a few months back, and he wrote a book called Be Obsessed or Be Average. And I was chatting to our mutual friend Lorna Tilvane, who helped arrange this podcast for me very kindly. And when I mentioned that we were doing it, she said, "Well, so Martin epitomises that phrase, be obsessed or be average." She loved the phrase, and she said, "That's something that you epitomise." And
well,
would you say that's the secret to your success?
I don't know. It's the secret. I mean, I think I am. People. You talk to people who sort of know me or know of me, they probably will say that. And obsession is dangerous, because if you become obsessed with it, you become imbalanced. And I not unbalanced, but imbalanced. And I think there's something in that. I mean, I always quote George Cabot Lodge's course, Business Planning in the Environment. I think it was called BPE. At the first year of a compulsory course at HBS, I thought that George, along with my colleagues, was useless. He was the son of Henry Cabot Lodge, who was the Secretary of State, I think, in the Eisenhower administration. And we thought, of course, but actually his course was extremely wise. He believed there were three circles that intersected in a Venn diagram-like way. You had your career, your family, and society, and how you balance those three balls or circles, or how they intersected, was pretty important. And I thought that was pretty shallow, but actually it's very deep, and it's always punctuated my life in some way. And I think, if you are obsessed with one of those things, that could be your career, your society, clearly the other two things suffer, and you become imbalanced. And what you have to do, and I'm not aware of many people who manage to balance those things successfully. I mean, some may do well with their career. Some may well do well with career and family and balance the two. Some may do career, family, and society. But those are very rare, or rarer. And I found it difficult to do. So if I am obsessed, which I think is fair, and I think obsession, if I'm an investor in a company, I want the management to be obsessed. I think the biggest problem in businesses is I think Jorge Lehman of 3G got it right. I was at a corporate governance seminar at Microsoft many years ago. A lot of big bananas in the room: Warren Buffett, Jeff Bezos, Jorge Lehman, and others. And he said, I don't believe in corporate governance. I believe that management should have a significant shareholding, and not options, or of shareholding, that they go and borrow money from the bank. And the problem is the separation of ownership and control. And there was a book, I tried to study economics at Cambridge, and I remember some books, but one of the books I remember in particular is the theory of managerial capitalism by a left-wing economist called Robin Maris. And what he talked about there, he didn't criticize it, he just said, de facto, there's a separation between ownership and control, and that creates sort of bifurcated or ambivalent objectives. Yeah. So if I look at WPP at the moment, the shareholders didn't get a dividend last year. The management got paid cash bonuses last year. The management took a cut in their salaries this year. They've reinstated them already, but the poor old shareholders have been left holding the bag. Yeah. And so management, and there's nothing wrong being a manager. Management are more concerned about their own position and their jobs than they are about the business. And if you look at the WPP board, another specific example, they own no shares in the company whatsoever.
Right.
And so why is it they own no shares? Well, the reason is they think that the prospects for the company are pretty awful.
Yeah. Yeah.
And they will only do so. They might get given options or restricted stock, but they get that for nothing. So I think nothing can replace nothing. Going to a bank, borrowing some money, investing in the company, and getting up every morning with your heart in your mouth. That is, so whether you describe that as obsession or whether you describe that as motivation, I think that's critically important. And at S4, I have a controlling share. As long as the person running the company is not a lunatic, and I hope I'm not a lunatic, that's okay. Why is Facebook a great company? It's because Zuckerberg runs that company and he has control. Controversial in some respects. Larry and Sergey still run Google. Yeah. Bezos runs Amazon and has control of Amazon. So these are criticized structures from a corporate, the wonks, the policy wonks, the government, the corporate governance policy wonks criticize it. But I think actually it's really the best way. It's rather like a private equity model.
Yeah.
But you have skin in the game, as I say, your heart in your mouth. Every time you get up in the morning, you go to bed at night, you go to bed or get up in the morning worrying about the business. That is, now that can create distortions with family and society. I'm a good case in point in that, or a bad case in point in that. And maybe I do over egg the pudding if I'm going to be self-critical. And my father, if he was still alive, would say that to me. I'm sure. But you have to be more balanced about it and more nuanced about it. But I do think obsession, if that's, be obsessed or be average, is not a bad way of putting it.
Yeah, I mean, I've got friends that put Lycra on and go out cycling at the weekend. That's their hobby. That's what turns them on. It doesn't do it for me. I work on the business because that's my hobby as well. It's the whole adage. If you do what you love, you never work again.
Yeah, it was Mark McCormack who sort of taught me that. He was a scratch golfer.
Yeah.
He had met Arnold Palmer at Lake Forest, and he was a lawyer, and he could have become a professional golfer, I guess. But he decided that Arnold needed management. And that's how IMG was born. Yeah. So he, with a handshake, Arnold had 10% of IMG, which interestingly caused problems with Jack Nicklaus. When I was with Mark, Jack Nicklaus left and started Golden Bear Enterprises, which was sort of self-management. And I think the real thing that burnt him up, not less so Gary Player, I think, to be fair, was that every time that Jack won a tournament or prize money, 10% of it or a portion of 10% of it went to Arnold Palmer. So it didn't like that very much. But no, Mark said, fine. So the line between business and fun, evaporates, if you like. Yeah. And your work. So I think that's what my dad said. Again, he said, find a company, an industry you thought was fun, and the company you thought was fun.
Yeah. We've touched on there about the market cap of WPP and S4 Capital, and the fact that you've got that market cap size up so big already is incredible for S4 Capital. And you also mentioned that they've gone from, I think when you left there, 16 billion down to below 8 billion. Yeah, there's obviously a common denominator there, which is you. How much difference can one person make to such a big industry or such a big company? So,
I don't think that there are 20 599 other people at S4. There are 9,900. Well, when I was there was 133,000, but there are lots of other. So you can't. It's not down to one man, or one woman. But I do think leaders make a difference.
Yeah.
And I think passionate leaders, obsessed leaders, whatever you want to, entrepreneurs, people who have skin in the game, people who have their heart in the mouth. I don't regard being executive chairman of S4 or indeed being having been CEO of WPP as a job. It's a Bill Shankly quote, which I always use. Football is not a matter of life and death; it's more important than that. And I think that's a great way. Shankly was obsessed with Liverpool. They haven't had a man. I mean, Bob Paisley they had, but and now got Jurgen Klopp. I mean, Jurgen Klopp is probably the reincarnation of Shankly and Paisley. So it's like Ferguson and Manchester United. I mean, same thing. I mean, it's these people are obsessed or totally committed, totally focused, and I think there is collateral damage when you do that. I mean, it doesn't mean that you're a well-balanced person. It means, but as an investor, if I was running a fund or an investment vehicle, I would be looking for management that were totally committed, obsessed, put their money where their mouth is, had their heart in their mouth. I wouldn't be looking for managers who just regarded it, putting it simply as a 9-to-5 job. That's not going to get you. And so much of, and what the interesting thing about COVID is it's sorting out the wheat from the chaff. Yeah. Because of this pressure cooker that COVID, has provided, you've seen who can cope and who can't.
Yeah. I think it's, if you want to be the best at anything, you're going to have to make decisions in life. And you look at Olympians. If you're going to put some money on who's going to win a gold medal, you're going to put it on the person that's worked the hardest and made those sacrifices.
And I think you use the word sacrifice, and I think that's the right thing. I mean, and that's unfortunate. That means that it's like squeezing a balloon. You might squeeze it here, but it expands elsewhere. And I think, inevitably there is, I said, collateral damage, and that's sad, but I think true. And it's very difficult. I think I know that everybody is very focused on work-life balance, particularly with COVID, and how important it is. And I don't disagree with that. And it is, mental health and balance and work-life balance and family and all that is really, really important. I mean, maybe above everything else. But, I think when you're sort of doing the sort of things that we're trying to do, there's the commitment needed, and it is obsessive. And, I think that's what I look for. And I think that's what investors look for, actually.
You're talking about the importance of the workforce there, and you've mentioned in the past that you see them as an investment rather than a cost. We're very heavily built on our values at EMG. How do you keep that culture when you're scaling a business to the size that you have done?
The answer is it's very difficult. I mean, we've only been in existence for 2 years, so it's very difficult. And it was difficult with WPP, which had been in business for 33 years when I left, and it's very difficult to define what the culture is of a WPP or an S4. I mean, I define the purpose of S4. The mission is to the new age, new era advertising and marketing services model. And the subset of that is to disintermediate, disrupt the old. I mean, we are men and women on a mission. We believe that the analog model, the ad holdcos as they're called, holding companies, are not fit for purpose and past their sell-by date. But our purpose is to create employment. I have to say, I mean, this is maybe somewhat controversial, but when I saw the Business Council sign up a year or so ago, that the purpose of a corporation is, to to feed its stakeholders, if I can put it like that, not just to make profits. I've got to say, I yawned because, it's very simple. John Brown, who used to run BP, WPP used to be the agency to BP, put it very well in 1997. Where he talked at the Stanford Business School, where he talked about the purpose, and particularly in the energy industry, and he talked about how important it was to focus on the long term. So if you think about long-term profitability, all this corporate governance stuff and policy wonks and everything else disappears.
Yeah.
Because if you're in the energy industry and you're mining for oil, or old energy as opposed to new energy, but if you're mining for oil, if you're in it for the long term, you won't do things that will offend the local communities or the environment or whatever. You will do things that build for the long term profit. If you're in it just to make the largest amount of money in the shortest possible time, you'll rip your oil out of the ground and say to hell with the environmental consequences. So long-term profitability, I get really almost the extent of being annoyed about it, actually, because I think there is so much effort put into ESG and everything, and it's very, very simple. Yeah. We are a business to make the highest level of long-term profitability. And if you express it like that, it means you take into account your people. If you have to invest more in them, in either fixed remuneration, variable remuneration, or whatever, if you're worried about the environment in the long term, you will make allowance in your strategy for that too, zero emissions, whatever it happens to be. So everything gets dealt with if you talk about long-term profitability. So I think there's a lot, go really extreme, a lot of claptrap in this area. It's all about maximizing not short-term profitability, but long-term profitability. And then everything falls into place. Klaus Schwab's stakeholder theory about the interests of all the communities you have to serve falls very neatly in place. Yeah. And that's why I think having a stake in the company and it all fits together, that ownership and control comes together and is not separated. And that therefore, if you have a long-term stake in the business, equity stake in the business, you're naturally going to think about what you do in terms of long-term profitability. So with your investment in people, so S4, our revenues are about $400 million. We invest about 250 million pounds in people and about 30 million in property. I mean, just good case in point. I made the point, I'd rather not spend money on landlords, I'd rather invest in. And somebody wrote a snitty piece on LinkedIn saying, well, he's only interested in making money. The reason he's dropping leases is only interested in making more money. And I wrote back and said, yeah, I am interested in making more money, but the way we will do it is by dropping some of our leases, taking some of that investment, not all of it, but taking some of it and investing in people. Yeah. And that way we will make more money. And by the way, we'll create more jobs. Yeah. I was very proud of the fact that at WPP we had 200,000 people basically with affiliates, companies that we owned less than 50% of. So 133,000 controlled and then another 67 or whatever it was, 1,000 in companies that we owned up between 20 and 50% of. And I was very proud of the fact that probably if there's 3 or 4 people in every family unit, that we were responsible for 600 or 800,000 people. And I thought that was, and I thought, I thought that we started from zero. Now it's true, we acquired companies and therefore acquired some people, but we created employment. So we started zero at S4, we now have 2,600. So maybe we have 7,500 people who are dependent on what we do for their livelihood. And that's the objective. And I'm not going to complicate it. And at a time when jobs are under threat from technological advance, which I agree that I believe that technology decreases demand for jobs. There are people who believe the opposite. I don't believe that. I think, Maynard Keynes identified it in the general theory in 1929, he said the solution was that we'll all take more holidays. Now, that hasn't proven to be the case, but it's going to be even more of a problem, I think. That's why retraining, reskilling, education, private-public partnerships in that area is so important. So, I think that's really where we are.
Yeah. Okay. And talking of tech, there, you've said that 2/3 of your business is in tech and healthcare, which is the sweet spot, and especially during COVID-19.
Yeah.
Do you think that that's going to continue to be the case? And what impact will that have on businesses in that sweet spot that have basically proven that they're recession-proof over the last 6 months?
Well, nothing is recession-proof, and when you're doing well, it always happens. Something comes and bites you in the backside.
Yeah. And
that's the beauty of what we do, is that it's not getting everything right. It's getting, in my view, more decisions right than wrong. It's taking decisions, because delay is a negative, as my dad used to say. And I delay things when I'm not sure what the answer is. Yeah. If I delay an answer or a response, it's because I'm not sure what the right way through is. So, I just think that's where we are.
Okay. And talking of COVID-19, that's had an unimaginable impact on the business world. What do you wish companies were doing more of now? And what impact do you think the crisis will have on the future of both advertising and healthcare?
Well, I coming back to tech and healthcare for a minute. I mean, those are the V-shaped recoveries in COVID. I mean, COVID, there are probably four areas that: in-home entertainment and gaming, online shopping, tech, and healthcare are the four areas where we would call it V-shaped. Yeah. U-shaped tends to be more packaged goods and autos. Autos would be a flatter U-shape. Yeah. The L-shapes are obviously hospitality and travel. There are no chair shapes that I've come across yet, ones that have fallen apart. But, maybe we will see some verticals that have. But, COVID-19 has had an impact on consumers. Obviously, we're shopping online. 1/3 of US households have tried online shopping for groceries and essentials for the first time during COVID. We're educating online. We're communicating like this online. We're doing our financial services online. We're doing Dr. Google. And then second area is media. The media companies have accelerated their digital transformation. I was on a Zoom with one of the leading global media groups last night, and the pressure they are facing, basically in the form of dropping of advertising revenues, increase in subscriptions, is huge. And they're having to adapt even more. So newspapers, dropping like flies. Rupert Murdoch closes 100+ titles in Australia, New Zealand, and the ACCC is going after Google in relation to news there. Obviously, those two things are correlated. The streamers, Disney Plus, Netflix, Disney Plus, 100 million subscribers. I think it is probably the most successful product launch of all time. That's putting pressure on the free-to-air companies. Outdoor, disappears, but digital outdoor continues to strengthen. So we're seeing the media. And then lastly, the third area is you've got consumers, you've got media, and then enterprise. The resistance to change that you saw pre-COVID, because, you could, if GDP was going up 2 or 3 or 4% since 2008, very little inflation, very little pricing power. If you were running one of those companies, one of those uncontrolled listed companies where you lasted as CEO on average 5 years, you looked at it, you grew your top line by 2, 3 or 4%. You cut your costs a bit, you bought back stock, you increased your earnings per share by 5 to 10%. That was fine. That was and you were retired after your 5 years on average, and you left in your minds a decent legacy. Now all bets are off. Q2 was carnage, bloodbath. Banks, their earnings down 50%. Now we've seen, we bottomed. We were still growing. We grew all the way through COVID, but we bottomed in April, grew faster in May, grew faster in June, and we've had a even stronger July. So we've recovered. We're back to where we were in January and February of this year, pre-COVID, really. Right. And my view is that Q3 will be better than Q2, relatively. Q4 will be better than Q3, and then 2021 will be better, and we'll have a vaccine by Q2 of next year. It might be GSK, it might be Pfizer, it might be Moderna, or a mixture thereof. But there will be, something that will, I think, take care of current concern. It won't prevent another pandemic. I read an extraordinary note. There was a guy who's subbing for Ian Bremmer at Eurasia Group, and I think he's an American guy. And he was working, he saw Obama. I can't remember the reason why he saw Obama, and he was working for somebody who was talking to Obama just before Obama finished his presidency. And they asked him, they saw that Obama's attention span was waning. I think it was around 2016. And asked him what kept him awake at night, and he said pandemic. And it was quite extraordinary. Yeah, a very interesting story. That was the thing. And of course, Trump had a report on the pandemic in 2018. It was more how could they cope with a pandemic induced by a terrorist organization than it was what we've seen coming out of Wuhan and everything. But just was sort of eye-opening. So I think COVID has had a remarkable impact at the consumer level, at the media level, and at the enterprise level. And the enterprise level, you could toddle along, as I said before COVID. Now all bets are off. There's no status quo. So change agents inside. This is one of the things that we've seen, which is really important, I think. Change agents inside companies are getting more oxygen and getting more breathing space and getting more attention. So the common phrase that we hear is we're implementing our 2024 marketing plan in 2021. So everything is accelerating. I mean, you've heard Satya Nadella saying, 10 years of change in 10 weeks or whatever. Yeah. That was the origination, and everybody has a trite, sort of embellishment of that. So there's huge change taking place in a very short period of time, and an acceleration at the consumer level, at the media level, and enterprise level. That's the big change, and that's how you see the differences. And tech and healthcare, as I say, is about 2/3 of our business, and inevitably, hopefully, we will win business in automotive, in packaged goods, whatever it happens to be. But I'd like to keep that tech emphasis, because the tech and healthcare, life sciences area are going to become, because of COVID-19, will become even more important. So Zoom technology will improve. Microsoft equivalent to Zoom, Google's equivalent to Zoom, Facebook's equivalent to Zoom will all become more and more sophisticated, and travel will become less important. And we may well have beam me down, Scotty. We may very well have a situation where I can almost be in the room with you. I mean, this technology is pretty good. I mean, I can. When was the last time that you sat in a meeting and could look at 9 people or whatever it is, the maximum you get on the screen at the same time? And people say, well, you miss the interaction. Well, yes, but if I'm looking at your face and I say something and you don't like it, I can see it.
Yeah, definitely. And so finally, what's next for Sir Martin Sorrell? What's the big goal that you're working towards?
Well, I want to see S4. I mean, our big goal is around S4. So I'm obsessed with, going back to your question, I'm obsessed with making sure that S4 is successful. So that's the number one objective. And, how do you measure it? I don't really know. I just want, a lot of people say, well, what's S4 going to look like in 5 years' time? The honest answer is I don't know. I would just hope that we achieve our objective, creating the new age, new era advertising and marketing services model, and we disintermediate the old, generate a lot of interesting new opportunities for our people, hire more people, as we've done through COVID. We've gone from 2,400 to 2,600 during COVID, whilst the holding companies are firing 50,000 people. Yeah. So, that's the objective, continue to grow. I mean, our model at S4 is based around 4 principles: digital only, this holy trinity model of first-party data driving the creation of advertising content and programmatic, faster, better, cheaper, and a unitary structure, a one P&L structure. That's the theory. And, we're very focused on making sure that that is the model. So, we've got 2 clients who are what we call whoppers. That's more than $20 million of revenue a year. We think we're on the cusp of at least another couple. I'm instituting a target of 20 squared, which is we will want 20 clients with more than $20 million of revenue per annum. It would take us, that would be 400 million plus, which is our current revenue base. And at the moment, we only have 2 that qualify as over 20 million. So getting conversion at scale, proving that our model works at scale is critically important. That's the next job. But the answer to your general question is just making sure that S4 is as successful as we possibly made. And, if you said to me, what does that mean? I honestly don't know. You asked me at WPP after 2 years, we started in 85 and 87, we made the bid for JWT, which was 13 times our size. I couldn't have told you then where we would be. I mean, I knew, if it was post JWT, we knew that we had become 13 times bigger and we were a force, but, I wouldn't have been brazen enough to say that we would be number 1. And I'm not going to say that in relation to S4. I just want to make sure this model is successful.
Yeah, fantastic. Well, I'm afraid that's all we've got time for this week.
Okay.
It's
Good.
been a fantastic discussion. Martin, it really has been a pleasure talking to you. Thank you for your time. Thank you to all of our listeners. I hope you've enjoyed this very special interview in aid of our 100th episode. It's been a fascinating journey up until this point, and I can't wait to share the next 100 conversations with you. So thanks again to Martin. Take care. Goodbye for now.
Thanks for the opportunity. Good. Thank you.
No problem. Bye. Thank you. Bye-bye.